This is Paula Tavangier and you're with the weekly blockchain brief. If you want to know everything important that happened last week, such as the proof of reserves of Binance, Amber Group raising $300 million and all the rumors surrounding it, as well as a lot of macro data and important decisions that had been taken, we'll be doing a summary of all that today, so please stay tuned. Let's go to the news of the week. We're going to start with Coinbase and their stock price. That has been quite concerning to investors because it already dropped to a new all-time low 6 times, and this time the price hit $37.70, which makes the overall drop 85% year to date. However, if we look at the crypto market, this is quite in line with also Bitcoin's price, which dropped 75% from its all-time high, which was nearly a year ago. I have seen few websites to argue that the drop is due to investors' fears of centralized exchanges now due to FTX, and also that there might be some need of proof of reserves for investors to feel again the confidence. But at the end of the day, Coinbase is a publicly traded company, and the balance sheet and all the financial statements are audited and provided to the public. And also balance sheet is a full picture of all the assets and liabilities, which for me serves as a better instrument to evaluate the company's position than a proof of reserves only, because this just shows what they hold but not the liabilities, while the balance sheet, as I said, gives the full picture. There might be a need for proof of reserves for more of the crypto native investors. However, all the data is still publicly available for anybody who wants to check. And when we look, if we're thinking about the direction that Coinbase share will take in terms of price action, the large institutions and the large funds are actually quite positive on it based on what we're seeing from them. For example, ARK Invest started adding back to their Coinbase stock position at the current levels. ARK Invest particularly has 290 million in Coinbase stock, as that was the last public information as of September's end. This makes them the largest institutional holder right after BlackRock, A16Z and Vanguard. ARK Invest currently is adding to their Coinbase position, as I said, by acquiring more than 375,000 shares in the past week only. Then we move to the quite controversial topic lately with Binance and their proof of reserves. Here we're going to focus a bit more on Mazars, the auditing firm that did the proof of reserves for Binance. And actually they're the same company that previously also issued reports for Crypto.com and KuCoin. There were news around that the firm deleted the website that hosted the proof of reserves work for cryptocurrency exchanges, and the management also told Bloomberg that they would be suspending its work with crypto companies and especially proof of reserves going forward. Which, of course, here I think it's important to highlight that this doesn't make the proof of reserves work and report that they issued previously invalid. Just on the contrary, there was a lot of noise around it, and Mazars at the end of the day main area of business is not crypto, so it can be quite understandable from their end to be very careful with their reputation and to cease such line of business. But again, as I said, this shouldn't make invalid any report that they previously issued. Maybe to come back, if you haven't watched the previous blockchain brief where we talked about the Binance proof of reserves, the issue with the proof of reserves that some people noticed is that it covers only a very small portion of Binance's activities and only feel the need to have the full picture. Without having that full picture, it's impossible to say with 100% certainty if Binance currently holds the users' accounts in segregated crypto wallets, or if there is any potential market exposure and risk there. And then we move to Amber Group last, and you'll probably see that the news is regarding their latest Series C round. And where we usually discuss such news in the VC section, today we're discussing it here because there are tons of news actually around Amber Group these days, and we wanted to summarize it in one piece. The news is that they raised $300 million in a Series C. However, initially it was planned to be an extension to the Series B they raised earlier this year in terms of Series B+. And they wanted to keep the initial valuation of $3 billion. However, that's not the case. We don't know the exact valuation right now, but they raised the $300 million in Series C at the end. The round was led by Fenbushi Capital US and also was joined by crypto native investors and other family offices. That's what we know. Going to the interesting facts, we know that been cutting costs for a while. They did a pretty serious amount of redundancies in the company, and currently there's some rumors, like two rumors going around, and I want to highlight, like, these are things that we had seen in the headlines. It's not our own opinion or information that we directly have. It's coming from Blockworks, which previously reported that Amber's UK subsidiary Whalefin actually is an app that is offering buying and trading of digital assets, that this platform has been essentially shut down. However, Amber responded to that it's everything was okay and it's just business as usual. Is there anybody watching that is actually in the UK and using the Whalefin? Share with us, please, your experience. Did you experience any issues lately? Any hold of payments, or is the platform fully functioning? Another news is again related to Whalefin, and that they terminated a 25 million sponsorship deal with the football team Chelsea, which is already listed in the Whalfin's website as one of the global partners. So these might seem like small news, but obviously these are all like combined to evaluate the overall well-being of the company. And the third one, which is actually the crucial one, since they just raised funds and it's expected that they would be having enough funds to cover whatever needs in future if the revenues remain low. There are reports again by Blockworks that Amber Group owns the CEO of the bankrupted lender Volt $130 million. Volt was one of the platforms that is doing lending similar to BlockFi and Celsius, and they're one of the companies that went bankrupt, and now there are corporate filings against them. So this means that if Amber Group owes them this money, they'll be essentially taken by the court. And 130 million already makes a big portion of the new round that they raised, which would, if that's true, this will decrease the overall amount that they will be having for operational expenses. Again, Amber Group declined that, and we don't have, we just have the news article on this. So we're going to be following the matter and see how it will surface. We move next to macro. A lot has been happening. Just last week, there were multiple announcements of interest rate hikes. And since we usually cover US only in this section, since it's like the global driver and a big factor for assets pricings, I want to briefly discuss this time also the European policy, because this will be very determining for the severity of any expected global recession. The European Central Bank opted for a smaller rate hike on Thursday, taking the key interest rate from 1.5% to 2%. But actually it said that it will raise the rate significantly further to tame inflation. And even if we look at the numbers for inflation that they gave, they pretty much revised their expected inflation in the coming years, and already it seems that they're okay with slightly higher inflation than what was imagined previously, or maybe they understood that with huge hikes they can reach the 2% target, which wouldn't be healthy for any economy. So the revised rates currently for inflation are 8.4% for 2022, and for next year we have 6.3%, like a gradual drop, and then we have 3.4% in 2024, and we reach finally to 2.3, which is very close to the target rate in 2025. But however, this means, as you're seeing, it's gradual, but still it's quite a sharp decrease in the inflation. It would probably make us expect further aggressive hikes. Lagarde clearly guided the market to anticipate 50 basis points hikes also in February and March, and definitely pushed back any expectations that they might start cutting the rates anytime soon. On another hand, they also started their balance sheet. They announced that in the beginning of March 2023, they'll start to reduce their balance sheet by 15 billion euros per month on average until the end of the second quarter of 2023. And it seems like we start settling down in this new environment of high interest rates. Here we saw during the last week that Fed also increased their interest rates by 50 basis points, which was actually the consensus. That's what we were expecting. So this didn't harshly affect the market, but more of the expectation that there will be further harsher increases in the interest rates affected a bit negatively right after the decision. And in the same week, the Bank of England and also the Swiss National Bank increased their interest rates. Let's look how this would affect our daily life, investments, etc., and why we're even talking about all of this every time in the macro section. The higher interest rates, the existing bond prices will keep dropping, and this will increase the overall yield, which means that investors would be able to get a pretty good return for nearly risk-free investments. And when that happens, there is a withdrawal from the riskier ones. So when it comes to big investors, to put it in simple terms, if you can get 5% from a government bond, US government bond, which is considered still to be some of the safest investments, are you going to lock in this 5%, or are you going to, let's say, stake Ethereum and get similar return per annum when the price is so volatile? And for everybody that is expecting a huge bull run next year, for me, I always take this factor into consideration. We had never been in such high interest rates environment. On the contrary, we were at a very easing policy, and for the past 2 years, there was tons of monetary and fiscal stimulus pushed into the economy, which actually fueled those rallies to happen. And now when those money are not entering the system, and just on the contrary, people are getting a bit more risk off, investors are getting a bit more risk off, what is going to happen to the riskier asset classes? This will definitely affect equities. We had seen that already from major research reports from the investment banks, that there will be cutting down on equity and increasing a bit more the fixed income. And this means that the space, normally in an ideal portfolio, you have around 5% of risky assets or alternative investments, which currently we would consider probably crypto to be. So what is going to happen with that 5%? Is it going to shrink further? Is it going to increase? Normally in such market conditions, it's supposed to decrease. Following that and see will be the inflows into that sector. And again, we should at the end of the day consider that it's still very developing industry, is very young, so regardless of the overall macro conditions, if it grows as an industry, we might see some upside there. So let's move to the VC section. This week we have two very interesting deals. In between those two deals only, $120 million were raised. So I think that this also is a very good indicator of the state of the industry. There is still funding, VCs are still investing, but I like the type of deals that confirm actually our investment thesis in SwissBorg Ventures as well, and our outlook for next year, that most of the funds will be focused on more of building the basics, infrastructure, DeFi, layer 0, layer 1. So let's see what the deals were. The first one is from Aztec Network, which raised a spectacular $100 million in this market. The round was led by A16Z. Let's see, what is Aztec Network? It is a private layer for Web3 that defines itself as the encrypted version of Ethereum. While there are other encrypted blockchains like Zcash and Ironfish Network that you might have heard of, Aztec differentiates itself by its programmable nature. So Zcash and Ironfish Network are more of like Bitcoin, where you have a predefined parameters, while with Aztec you can actually program the protocol. And other than that spectacular technology, Aztec has a very strong backing, as I said already, from A16Z, and they also have separate participation from industry leaders such as Hashkey and from Bushy Capital. We'll be following closely this exciting project, which is targeting a testnet launch within 12 months from now, and they're also hoping to be fully deployed on the mainnet between 8 to 24 months from now. And they also have the Aztec Connect app, which is already live, and it's expected to be the first application on that network. And the second deal, again highly technical, comes from Nilian, which raised $20 million to build a new Web3 infrastructure. Nilian allows for very fast computations of secured data and storage of that data that you cannot achieve with blockchain. So these are very high stakes here. See that in action and how it will perform. CEO said that they are looking to open up an entirely new universe of Web3 cases that expands the ecosystem. The startup was founded in November 2021 and was actually bootstrapped, meaning that they didn't raise any external capital to support them until that time. So that was their first round. Their team actually is very impressive. They grew to more than 40 employees, again, without external funding until today. The founders include ex-Uber, Indiegogo, and Hedera Hashgraph employees, as well as some executives from Coinbase and Nike. The round was led by Distributed Global, and other investors also included AU21. We also see their Big Brain Holdings, Chapter 1, GSR, Hashkey, OpCrypto, and also Salt Fund. Actually, more than 150 investors who participated in the race, and the reasoning behind is that they didn't want to have any concentrated ownership into one fund or to one big whale only, which also really shows the thought behind the whole race. Because right now, to be fair, a lot of companies are a bit desperate, so the fundraise is going more on first come, first serve basis, because there's a lot of uncertainty in the market. And as I said, a lot of companies are just rushing to raise the fund. So I really appreciate and I like that they bootstrapped until now, and even in this difficult market, they managed to raise a pretty good amount from a lot of investors very strategically. So again, that's another project that we're very excited to unraveling. That's all from today. Thank you so much for watching. We hope that we are useful, that you like the content. Please feel free to leave any comment, any suggestion down below, and wishing you a great week ahead.